Thank you for joining us. This is Kathy Barzal with DiTommaso Real Estate, joined again with Jennifer Daly from Roundpoint Mortgage. Thanks, Jen, for joining us.
Absolutely.
And I get people that call me up, they're looking to buy a house. And Jen, they say, like, I say, oh, well, the first step is to get pre-approved. You have to talk to your mortgage person, get pre-approved. And they say, oh, no, I don't want to have my credit pulled. I'm good. My income, but you know, they go through their whole why they don't need a pre-approval and why they don't need their credit pulled. Can you talk to us about why that's an important part of the process?
I would love to, because I run into it quite a bit. So people kind of want, a lot of people when they call me, they'll say, no, I know what I can afford. My credit score is 800 because that's what my Chase app says. And they kind of do their own mortgage. And so I say, listen, you know what, you really need to find out a few things. You need to find out what you can afford, what we're going to pre-approve you for, what Kathy can show you, what your payments are going to be. So it all comes down to doing the pre-approval. And in the pre-approval, it's an intricate part is pulling credit. So they get very afraid of that. I don't want you to pull my credit. It's gonna knock my credit down. So what I tell them is that you really do have the ability to shop for a mortgage. If you have 1 or 2 or even 3 pulls in a 30-day period, it's not going to have a detrimental effect to your credit.
Okay.
If you're doing that on a mortgage end and then you decide you want to open Victoria's Secret and Home Depot and Lowe's at the same time, you're going to have a problem, because at that point you have multiple inquiries in a short period of time. That's what hurts you.
And the banks don't like to see that, right?
No, and it's more the credit agencies. That's what tags you. And for us, now your credit is lower. So the inquiries, we're not, okay, they had a lot of inquiries. It's what it does to your credit score that affects us on the banking side. So it's definitely something that you have to do. For me to be able to say to you, hey, Kathy, John Smith should be in this particular price range, I need to know what his debt is.
Right.
We don't only pull credit just to find out about what your credit score is. There's huge components that go to it. We need to know what your debt is, your car payments, what's existing, things you don't tell us about. A lot of people just say, oh, I forgot about that timeshare or this, that, and this and the other thing. And there's things on that credit report that they don't think is important, but we have to see. Even other properties. People don't think it's important to mention they own other properties. The credit report shows you and your history. So it's very, very important that we do it. And it is a benefit for the person who we are working for, because it's going to give them all those answers. You can't just go out there without it.
Right, absolutely. And you know, it's funny because I know I've had my credit pulled and I've looked at it, I'm like, wait a minute. Like I paid that off and it's still there. And sometimes you don't realize, like, you might have had a copayment from a medical for $20 that has now gone to collections, and it's affecting your credit. Absolutely. Like sometimes there's surprises on your credit too.
Yes, the number one credit drop that you could do to yourself is miss a credit card payment. You could drop it 60 to 80 points in one shot. Wow. Do you know how many people don't know they missed that payment until I pull that credit, and then I'm the bearer of bad news? But at the end of the day, you need to know what's going on with your credit. Absolutely. And relying on your Discover Card app telling you did a great job in your credit, that is not an extensive, comprehensive view of your credit history. When we pull it, we see everything.
Absolutely. So I think, and it's so important. And also too, people forget that they've co-signed.
Right. Oh yeah, co-signed for those 3 cars. I forgot.
Right. For a family member or whatever, they forget that what they've co-signed for also hits their credit as well.
100%.
So even if you're thinking about maybe even co-signing for somebody, you might want to think twice about, only because if you plan on making a move, that's going to affect your credit as well. Correct. So just make sure you have the complete picture, like Jen said.
Absolutely.
So thank you so much, Jen, for busting that myth that you should not get your credit pulled, and that's great. So please, if you have any questions at all about a mortgage, about financing, if you're thinking about possibly buying, you want to talk to Jen first. And of course, you know where to find me if you want to start looking for a house once you have your credit pulled and get pre-approved.
Yes.
Thank you so much for joining us. Have a great day.